Hey everyone, welcome back to Corporate Decoder. Today, Nortech Systems Incorporated just filed an 8K reporting its Q1 2026 results, and I'm seeing a familiar pattern in how they are handling their disclosures. Quick note, this is not financial advice, just my take on public filings for educational purposes. Nortech Systems is reporting its first quarter results, and while the headline news might seem positive, we need to dig a little deeper to see the real story. This document is a current report, which means Nortech Systems Incorporated is sharing important information with investors that isn't necessarily part of their regular quarterly or annual filings. When you see this form, it usually means something significant has happened. The key date here is May 13, 2026, which tells us when the events reported in this filing actually took place, or were first known to the company. This is our company, Nortech Systems Incorporated. They are in the healthcare and medical devices sector, and they have about 685 employees with a market cap of around $35 million. Their P/E ratio is currently around 32.7. This filing comes out alongside news about their Q1 2026 results, with headlines mentioning a backlog and a small loss, which is an interesting mix. Nortech Systems Incorporated is incorporated in Minnesota, which is just a piece of background information for us. The company's common stock is listed on the Nasdaq Capital Market, trading under the symbol NSYS. This is where you'll find their stock if you are looking to trade it. This section is where the main news is reported. Nortech Systems released a news release on May 13, 2026, titled Nortech Systems Reports First Quarter Results. This is where we expect to find details about how the company performed financially in the first quarter that ended on the 31st of March 2026. This part lists the attachments to the report. The most important one for us is Exhibit 99.1, which is the actual news release containing their first quarter results. This news release is the core of what we need to understand about Nortech's performance. It is furnished, meaning it is provided to the SEC as part of this filing. Now, let's dive into what this news release, and by extension this filing, is actually telling us about Nortech Systems. The headlines we've seen suggest a bit of a mixed bag. One headline mentions a $90.8 million backlog, but also a $34,000 loss for Q1 2026. A backlog is essentially a list of orders that the company is yet to fulfill, which is great because it provides future revenue. However, a loss, even a small one, is still a loss. We need to see if this backlog is translating into profitable growth or if the company is struggling to convert those orders into earnings. Often, companies will release these results and then follow up with an earnings call. We see a transcript for their Q1 2026 earnings call scheduled for May 15, 2026, just a couple of days after this filing. This call is where management usually provides more color and answers investor questions, so it is definitely something to watch. When we look at broader market trends, companies in the medical device sector can be quite sensitive to economic conditions. A large backlog is a good sign, indicating demand, but profitability is key. We've seen companies in this space, especially smaller ones like Nortech with its $35 million market cap, face challenges in managing costs and converting revenue into profit. What I'm looking for here is not just the headline numbers, but the trend. Are sales growing? Are expenses being managed? Is the company moving towards profitability, or is it slipping further away? The fact that they reported a loss despite having a significant backlog raises a question about their operational efficiency, or perhaps the pricing of their contracts. Consider a company like, say, a hypothetical small manufacturing firm that had a $10 million backlog, but reported a $50,000 loss in a quarter. This might mean their cost of goods sold is too high, or their overhead is eating into their profits. For Nortech, if this continues, it could signal a need for internal restructuring or a push to renegotiate contracts to ensure better margins. The immediate market reaction to earnings can be volatile. We saw a headline from investing.com Canada on May 14, 2026, stating that Nortech Systems, NSYS, sees Q1 2026 revenue rise, stock falls. This suggests that even with rising revenue, investors might be concerned about the profitability or the overall outlook. A stock falling after reporting increased revenue is often a cue that investors are looking for more than just top-line growth. They want to see a healthy bottom line as well. Looking at the institutional ownership, we see some familiar names. Renaissance Technologies and Vanguard hold significant stakes, which generally indicates some level of confidence from larger. Sophisticated investors, however, their percentage ownership is relatively small, which is typical for a smaller cap company. The key takeaway from this 8K is that while Nortech Systems is reporting on its Q1 2026 financial results, the devil is in the details. The combination of a rising backlog and revenue coupled with a net loss in a stock that may have fallen, tells a story of a company striving for growth but facing profitability challenges. It will be crucial to see if they can turn that backlog into sustainable profits. The upcoming earnings call will likely provide more insight into their strategy for achieving this. That is my take. Stay decoded. If you find these deep dives into corporate filings helpful, please hit like and subscribe for more. The tools I use for research are linked in the description.